morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, daily chart of the S&P, and we're still in this is just pure compression. I talk about it in detail in the daily report today. I talk about it in detail in the blurb in my briefing report for the subscribers. And basically what I say is this: look, you've got the bulls that can't hold the ball above 70. They get into 68. They look great between 60 and 70. Okay, they push it higher, they get above 70, and they just go to pieces. They lose the 67.5. You come right back down. Typically, you come all the way back down to anywhere between 22.55 and 22.60. And while that's happening, the bears look fantastic. When we get down to 22.60, 22.55, the bears just go away. We had two moves down, one to 55 during the press conference and another one to 56 and change afterward. And both of those moves were stiffly rejected and taken right back up. You can see it here. So, I mean, everything below 60 is getting rejected to the upside. Everything on the upside can't get held, and we just continue to fade back into the middle. We've basically spent the entire week engaged with the middle band on the daily chart, which has been around 57, 58 depending, and the weekly pivot. Now, every push below the daily mid band has been sternly rejected. We spent most of our time above the band. If you can kind of imagine where I have this 59.5 line here, you've got the daily mid band kind of gliding in through here. So you have to give the nod to the bulls just barely, and based upon the fact that we keep staying above the daily middle band. If the bears are for real, if this is ultimately going to be a lower band ride down, and that's still the way I'm leaning, and I tell you guys right now, I tell you not to be biased, I tell you not to do this, not to do that. It happens to everybody. I have had a very difficult time personally getting long this market this week because ultimately these moves typically result in a band ride down. But I can't tell you how many chunks of handles I could have pocketed this week if I just had traded both sides and not, been stubborn. All right. So it happens to everybody. And when it does, you got to take a step back. You got to reset yourself. You have to look at the tape for what it is, not for what you want it to be, and, get out of your head, so to speak. So, anybody who trades, that's going to happen to you. And I found it happening to me. And so, you just have to reset yourself. A big part of trading is self-awareness. You have to be self-aware enough to know, look, this is what I'm doing. This is what I'm doing. I've done it before. Stop doing that. It's the people that aren't self-aware, or the people that get stubborn, or the people that say, well, this is how I want it to be. Those are the people that end up 10 ads into some mess of a trade and dump it for 100 hand. I mean, just don't do that. -3, whatever, you can deal with that. Minus, who knows what. When we're talking about dozens, those are account changing events. So if you find yourself having difficulty trading this tape, it's a tough tape to trade. It's very whippy. I mean, it's incredibly whippy. It's whipping everybody back into the middle, and then at the end of the day, it really doesn't go anywhere. And that's because of the compression on the daily bands. So we're going to get expansion. I never want folks to guess the direction of an expansion because, in my opinion, expansions last so long and there's so many handles associated with them that there's more than enough time to get in, more than enough time to get involved. In reality, you're going to have multiple entries with regard to the expansion because you're not just going to put one trade on and hold it. Real life doesn't work that way. But you can do a lot of damage to your head, and you can do a lot of damage to your account trying to anticipate expansion before it's ready to go. So you're better off just kind of fading everything back into the middle. It goes up, it goes down. Now, eventually, that won't work. Eventually, we're going to break this range, and it's going to stay broken. Is today the day? I have no idea, and neither does anybody else. But the areas to watch for, same ones we've been watching all week: 67.5 to 70 on the up. They've got to take out that high at 77, or we're not going anywhere. On the downside, weekly pivot 62.5, daily mid band around 59, and now they have to deal with 55, and then ultimately this low down here from the 5th, 22.54, so 54.55. If the bears are for real, all that gets taken out and it stays taken out. To the extent though that it can't, and it starts to build higher lows or lower highs at the edges of those areas, that's when you can fade things back in the other direction, and that's the trade that's been working lately. Okay, that's all I got.
Follow us on Twitter @PrincetonTrader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.